Today's episode is brought to you by Security Financial Management.
Ooh, welcome back to Best Advice Podcast, guys. I'm your host, Rob Lovaglio, here as always with Mitchell Walk and Austin Jacks. Gentlemen, what's cracking today, boys?
What did you say?
Well, I think, Austin, we hope the Fed is going to start cracking these interest rates.
Yeah.
That'd be nice, wouldn't it? Seems that way.
We think so, yes.
Mitch is out in LA meeting some market managers on these interest rates, and Austin is also doing the same thing here locally. So we're doing some Zoom. We're trying something out different today, guys.
Yes, we want to continue, and we're happy and want to thank everybody. We've been getting a lot of followers, a lot of views, because we've got a great team and a lot of good information, and we know we can help people.
Yes, sir. Yes, sir. So let's get started with the segment we like to call Give Me Something Good.
Hey, give me something good.
Today's Give Me Something Good is kind of a motivational kind of thing. If you say you go every morning, you have a routine, Mitch, and you go get coffee right down the road from the office, and you have a friend say, hey, I'm going to come meet you for coffee tomorrow, and I'm going to start putting this in my routine as well. And Monday comes around, he doesn't show up, right? He texts you and says, hey, I'm going to come tomorrow. Tuesday comes up, he doesn't show up. Continues to Wednesday to Thursday. That goes on for about a week or so, right? The next time he says he's going to meet you, do you believe him?
I'm all jacked up on Mountain Dew. I'm gonna come at you like a spider monkey.
I look at it a little differently. I've got my routine. I'm not changing my routine. I'm going to go do what I'm going to continue to do. They probably won't show up, though.
He probably won't show up, right? That's
probably won't show
my
up.
point. And the point is if that is how you would handle a good friend of yours, how is it any differently when you tell yourself you're going to do something? And if you consistently tell yourself you're going to do something like go wake up and work out, and you consistently don't do it, you're going to stop believing in yourself, and you're going to stop believing in what you're telling yourself, right? So it's kind of a Kobe. I kind of got this from Kobe Bryant, that is, and his whole theme was like, stop negotiating with yourself. Once you commit to something, you're doing it. There's no negotiation. You didn't wake up tired. I don't care how tired you are. You committed, continue. And that's my Give Me Something Good.
That's good. And you just have to commit it and do it.
That's good.
That was good, Ron. That was good. And by the way, I think if you look this up, it takes 21 days to create a habit. So if you do something for 21 consecutive days, it will become a habit, and you'll do it every day.
I like it.
So,
I like it.
Do something good.
Get something good. Let's get to the question of the day. Today's question comes from Ross from Minnesota. Ross, what you got for us?
You want to say something?
Hey guys, Ross wants to know, what should the average Joe, or in this case, the average Ross, look to do when the interest rates are lowered?
Thank you, Ross. Okay, who wants to start this one off?
So, Austin, we heard a couple of weeks ago, and we've actually heard for a long time now, the Fed is looking at the data. Finally, about a week and a half ago, they said that the data seems to be in a spot now where they can start to lower interest rates. I think they had 16 interest rate hikes over a year and a half. So that has really raised rates high, and it's starting to slow up the employment numbers, and a lot of other things are dropping. Commodities. The only issue we still are stuck with is some higher food prices. Hopefully that'll happen. What are your thoughts if they raise it or drop it? I'm sorry, if they drop it maybe a quarter, maybe a half. Nobody really knows. We've heard both. What do you think that means for the average person? It's only 2 weeks away, almost 2 weeks away, September 18th.
Right. Well, for the average person, you got to think what is tied to those interest rates. You look at mortgages, you look at, any debt service type stuff like credit cards or buying a car. So, as people are evaluating maybe whether they're going to move, whether they're going to purchase a car through debt, hopefully and likely what we'll see is that debt service will be less than what it currently is. So a big thing will be, and we've started to see it, mortgage rates are starting to go down. Some of the debt financing stuff is starting to go down, but also, from an investments perspective, looking at, hey, for a while, people are able to get 5% on 1-year CDs, 5% on money market accounts. that's likely going to go down too. So for the average consumer, average investor, you have to look at, what are potential mortgage rates going to be? What am I able to earn on cash in a savings or CD type vehicle? But that's really where I think people are going to be most affected.
Yeah, that is important. It's a great point because it's kind of a good news, bad news. The good news is for people that are working and not retired, they're going to see their debt issues and things go down like that. The bad news would be for people who are retired and really seeing a nice interest rate bonanza here for their fixed income. For the longest time, we were at zero interest rates. The Fed rate was zero. And over the 16 raises, they raised their interest rate from 0 to 5.25 to 5.50 is where it was, somewhere between that level. So to your point, yeah, over 5% money markets, long-term lock in those CDs. We expect to see those start to really drop. So once they start to drop, the people on that fixed income are going to look for other ways and needs to help subsidize the nice income they were receiving. Now, we look at things like that, and we've got some plans that we can help them with, and just to, to consult with them, maybe give them some ideas. It's not as easy as it used to be because those rates are going to be so much lower right now as expected. But the good news is cars are going to be a lot more affordable once the rates start to drop down. Housing, we've seen this. There's some 7-year ARMs now, Bank of America over in Sarasota. I was talking to some of the people there. They've dropped their 7-year ARMs, which is an adjustable rate mortgage. It would hold it for 7 years and then it would reset. They dropped it to about 5.5. Remember, I believe within the last year, a little over a year ago, 30-year fixed was all the way up to about 8%. So there's some leeway there for people that really need to move out quickly. But others have interest rates locked in at 30 years for 3% or less. So it's going to be interesting to see what housing market does.
Yeah, it'll be interesting too, because obviously, with mortgage rates going down, people might be tempted to refinance or something. If they bought a house and got a 6.5–7% mortgage, interesting to see, over the next year or two as the Fed starts to lower interest rates, and it sounds like they'll continue to lower them, how many refinances we'll see on mortgages. So that's something, we can help out with too, because it's not just your monthly payment. There's closing costs and things like that to consider, but I imagine that'll start to go up as well as these rates start to come down.
Yeah, and another point with that as well is the home equity loans, because people, unfortunately, credit card debt has continued to rise. And, some of these credit cards are between 20 and 25% interest rates. Those are the things you need to get rid of first. I mean, 20 to 25%, if you pay a minimum payment, you could never pay that. You may never be able to pay those credit card debts off at those rates. Home equity loans may drop to 8, 8.5, 7. We don't know. It all depends on the Fed. And that may be a strategy to try to get some of that high interest rate credit card debt off and then pay the principal down as well. It will also help, we didn't talk about, but small business owners. A lot of small business owners have taken 5-year, 6-year interest loans. And when those loans are starting to mature now, because 5 or 6 years ago, they were extremely on the low end, very, very, very low. Now, when they have to refinance, they're looking at 6, 7, 8% in some cases to refinance. If the timing works out for those small business owners, which is the backbone of America, they may actually be able to get some much better rates once this starts to happen. So the interest rates dropping, whatever the Fed is going to do, hopefully September 18th we'll know, is very significant for many, many, many Americans, the economy, as well as the U.S. government. When they issue treasury bonds, treasury bills, either one, they have to give a higher interest rate. And when they make these loans, that adds to our debt. And when our debt is high and you've got a higher interest rate, that's going to cost the government even more money, which us as taxpayers wind up paying. So we're going to see all these changes happening, and it's going to be very, very important. But we are here, as Rob said earlier, we're out here meeting with different people, looking at all the different opportunities and what we can do to help people, whether they need more income because they're going to lose a lot of that CD income and money market income, or people that are looking to refinance, or people that have high credit card rates. This is all part of financial planning. And again, you're a certified financial planner. This is what Security Financial Management does. We're going to help them with all of these issues.
Absolutely. So it'll be interesting to see how it plays out, but something that we're actively monitoring. And, you know, as these changes infiltrate the economy and we start to see those changes, we'll have a clearer picture. But like you said, you know, a lot of this stuff is slowly being priced in, but September Fed meeting, we should know a lot more.
A genius, plain and simple.
So again, people have questions, have them reach out and give us a call.
All right, folks. Remember, the secret to wealth is not what you earn, it's what you keep. Happy days, everybody.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed. If you have a question for the guys, email podcast@bestadvicepodcastguys.com.